And welcome back once again, options traders. Well, a lot of times traders hear this whole concept about volatility and they'll say, well, if volatility is high, I should sell options, and when it's low, I should buy options. Well, if it were only that easy, you have to understand more about what traders are inferring when they are talking about high or low volatility. So in this video, I want to give you a little different perspective on what it really means when we're talking about high volatility. So remember that volatility is this concept about, statistically, it's a standard deviation. It just shows how much variation we have in prices. So if you have very high volatility markets, we've got very big changes in prices. If they're low volatility, prices are fairly stable. So the whole idea of the volatility is that it is mean reverting, and that's just a very basic statistical term. Mean is just a fancy word for the average. It's a type of average. Reverting means that it falls back to this average. And so again, what traders infer is that high volatility tends to fall back to the average, which is true, and low volatility tends to rise up towards this average. That's what it means to be mean reverting. So if we look at the VIX from about 1990 through current times right here, we are in early 2022 right now, you can see lots of spikes, but overall just going sideways. And in fact, if you take the average of these volatilities, comes out to almost right on the money at 20%. So recall that the VIX, the volatility, is measuring the volatility of the S&P 500 index. So even though the index has been chugging along nicely to the upside, except for possibly the past week here, but overall there's this definite long-term upward drift. Not so for the VIX. And so what it shows is that if volatility is high, we get these high spikes, might want to call this the red zone, that there's a tendency for it to get pulled back down towards the average, which is true. And conversely, if we're below the average, down in here, there's a tendency for it to be in, let's call it maybe the green zone. All things being equal, this is where we would prefer to buy options because we would expect the volatility to be lifted back up. Now, of course, that doesn't necessarily mean that the market's going up, but it just means that if you are right about the market going up or down for that matter, that the volatility, the price that you're really paying for that option, is fairly cheap. And so if volatility does rise, it's an added bonus. So it just becomes another factor in your court. So that's why traders always watch the VIX, or the volatility index. The problem with this is that traders see the VIX as a single number. We're at like 80% back in coronavirus. And they'll say, okay, we're at 80%, therefore we have to start falling back. Well, is that really true? What about when we were down here at 40, 50, 60, and 70? Just because it's high, or it's some type of a high number relative to the average, doesn't mean that it's definitely due to come falling back. Conversely, if you're down here on the bottom side, it doesn't mean that it's definitely getting ready to turn. It's not as simple, is the volatility high compared to the average, or is it low compared to the average? We have to have a little deeper understanding. So think about this. If we look at two different curves, you really want to learn to think of things as distributions, as a list of possibilities. So maybe when volatility is low, we might be looking at this red curve. Don't think of it as a single number, but just for the example, let's put 20% on it. See, traders just look at 20% and they don't think of any other possibilities. What you want to think of is that this is the center of the curve. And the low volatility number of 20% means that there's probably not going to be a lot of variation around that 20% figure. That's why the curve is very skinny and very tall. The height of the curve shows that most of the data are going to be really close to 20%. Sometimes it'll be a little higher, sometimes a little lower. That's why it's not a really wide curve. But let's take a look at a high volatility environment, maybe like this. Maybe it's up at 60%. And so again, what happens is when traders wake up one day, they see the market's trading at 60%, they say, oh, well, the historic average or the mean has been at 20%. We're at 60, therefore I should go sell. You know, we expect that this is going to start falling back towards 20. But who says it has to be at this level or on this day? See, the thing that you want to realize is that this 60% figure is also the center of a curve. It's a distribution. Traders are saying, no, we don't know that it's going to be 60% in the future. We just think that it's probably a pretty good average guess. Could it be higher? Sure. It's a very wide curve. That's another way of understanding what 60% means. There's a lot of possibilities. Could it be a lot lower? Sure, it absolutely could be a lot lower. So traders are just pricing in these options, in this example at 60%, just to account for the fact that we really don't know, and that we are really allowing for a wider range of possibilities. That's the key phrase. You have to allow for a wider range of possibilities. Because if you start trading options by saying, oh, look, the VIX is at 60, and I know the average is 20, let me go start selling options, you're going to learn very quickly what it means to have a distribution. And you're going to see that highs can go a whole lot higher. So this is why before you embark on any type of option strategies, especially those that involve volatility predictions or volatility calculations, you have to understand the strategies and how to hedge them. Otherwise, as I always say, you're going to end up with unwanted surprises. And that's certainly no way to make money in the markets. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.